Welcome to another video yet again. So I'm going to be talking about a tiny $2 penny stock that has no dilution, has never conducted a reverse stock split, and this is a company that does have a 1.8 million share float. So this is a stock that actually ran to just around $7 not too long ago. And you can see this was a multi-day runner when this happened, and we finally did actually fill this gap right here whenever this one first started moving. So it looks like this one is completely bottomed out right here. It does have the 200-day moving average as support, and it's just kind of consolidating in this bottomed out area. Just drop a quick like for me on this video if you are enjoying this content, and make sure you have that notification bell turned on because these plays are extremely time sensitive. But I do want to talk about something that's really interesting about this company. So the total outstanding share count is sitting at 35 million shares, and the free float is only sitting at 1.8 million shares. Now, this is because the two majority shareholders of this company do own 16.67 million shares each. So they haven't really sold any shares in years. I've actually never seen them sell any shares, even when this spiked to around $7. It did actually spike to $7 or just around that two different times in the last year. I believe it happened just recently with this move right here, and then it happened in late December of last year. And both of these insiders did not sell any shares. We saw zero insiders actually sell any shares when these moves happened. So it is very risky whenever you do have, two majority shareholders that control this much of the outstanding share count. But just considering that this one is currently trading, it's completely bottomed out, it looks like down here, and it's trading around $2 per share. It doesn't make any sense for them to sell, at $2 if they weren't going to sell at $7. So that is just something to think about right here, guys. The stock I'm talking about for this video is HOUR, which is Our Loop Inc. You can see this is a stock trading around $2 per share, and they do have a $68 million market cap. The free float is sitting under 2 million shares. And just looking at their dilution filings, you can see they have zero dilution filings, and they have not really diluted any shares since they went public near the end of 2022. This is a pretty clean setup in regards to that. Now, keep in mind, guys, penny stocks are extremely risky. I'm not a financial advisor, and you should not even be looking at these plays until you do your own homework and your own research. But something I do want to talk about is they are doing a pretty substantial amount of revenue every single year, and they are profitable. So for 2024, keep in mind you always add 3 zeros to these numbers, but they did $138.2 million in total revenue with just around $657,000 in net profit. And they have experienced some very rapid growth year over year. So you can see in 2021, they were only doing $63 million or less in total revenue. This jumped to just under $100 million in 2022. And you can see in 2024, the most recent year, they did $138 million plus in total revenue. And at the same time, their gross profit margins have been increasing pretty rapidly year over year as well. So that is something that's always good to see. And for their most recent quarter, they had their most profitable quarter in years, as they did just around $1.2 million in net profit. And something else that we really have to consider is that the second half of the year is when they historically do put out the most numbers, specifically in Q4 of their fiscal year. So you can see last year they did $54.4 million in total revenue just in Q4 alone. And for Q3, their revenue started to really ramp up, and they did $31 million. But guys, Q4 is historically when they do perform the best with their financials. So that is another reason I'm covering this one right now, because it did actually bottom out, and they are expecting, a really strong finish to the year just based on their past performance. And with their business, they usually do have peak performance during the holidays. So with Christmas coming up and everything, this is definitely one to watch. Just something else that I really want to talk about. So they did just achieve the most profitable quarters for their most recent quarters that they've had in years. And this is actually due to these insiders, the two majority stakeholders being heavily incentivized to increase their net profits. So you can see this 8K filing came out, does say that if the company grows its net profits, excluding taxes and executive bonuses, to at least $1 million during fiscal year 2025, these insiders will receive a bonus equal to 50% of their base salary. Now, if the company grows its net profits to at least $2 million in fiscal year 2025, these two insiders will receive a bonus equal to 100% of their base salary. So we have the strongest, 2 quarters coming up for this company, and both of these insiders are heavily incentivized, like I said, to increase their profitability. Like I said, their profitability has shown improvements already going into the second half of 2025. So I'll be really watching these numbers coming out. Like I said, Q4 is always their strongest quarter. So that's the one I will be paying the most attention to. But looking at their balance sheet, guys, they have no long-term debt. They do have $15.8 million in total liabilities compared to $23 million in total assets. So just considering they do have that much revenue coming in and they are profitable, they are deeply undervalued fundamentally, sitting around a $70 million valuation. A company actually just now posted their Q3 results for 2025, and they were actually some really impressive numbers. So net revenues increased 7.6% to $33.4 million compared to $31.1 million for the quarter exactly 1 year ago. Net income increased to $530,000 compared to $470,000 for the same period exactly 1 year ago. And their cash used in operating activities for the 9 months ended September 30th, 2025 was $400,000 compared to cash used by operating activities of $1.2 million for the same period, the same 9-month period exactly 1 year ago. So you can see that their cash on hand went from $325,000 all the way to $796,000 for the most recent quarter. So their cash on hand actually increased. So they are managing their cash really nice, especially this year. And they, their business was affected by tariffs, and they are still putting up, really nice numbers, continuing to show aggressive revenue improvement and net margin improvement. Now, the only thing that was slightly down was gross margins. But for me as an investor, I really do care about the net profit margins more than the gross profit, because that's really what it comes down to after all of the expenses. It's more accurate to show, how the company is actually performing. So the management says right here that although they face numerous challenges, their sales and net income in the third quarter represent their strongest results to date. And the company is just outperforming on all metrics, in my honest opinion right here, except their gross margin slightly decreased. It's the only negative thing I saw. Q3 was a really strong quarter for their business, and I am really excited to see what Q4 brings to the table. As of right now, the stock is currently trading at $1.92. The 52-week high, according to Webull, is sitting just around $6.90. 52-week low is sitting at $1.10 according to this, and according to Webull, the free float is sitting at 1.7 million shares. According to Dilution Tracker, it is sitting under 2 million shares as well. So this one does have a very small float. With volume, it can become very volatile. And you can see just on September 8th of this year, this one ran to just around $7. And then in the end of 2024, on December 24th, actually on Christmas Eve, this one ran to just around $7. So just in the last year alone, it has spiked to $7 twice, or just around that level. And it does look like this one is kind of bottomed out, as we do have the 200-day moving average as support. And when this, the latest parabolic move happened, this one did actually gap up, and we finally came down and filled the gap. So I was waiting for that to happen. Usually when you have a, really big gap to the upside, the stock will usually come back down and fill that gap. And that's what happened. And now this one is kind of trying to base out and curl up after it did bottom out right here. Some really nice support in the low 180s. So here are some resistance levels on the larger time frames I did map out. And if you go on the weekly time frame, you do have the 50-day moving average as support, and it looks like we did just develop some nice support on the weekly time frame as well. So it looks like it finally is trying to base out. Like I said, we do have the 200-day moving average at just around $2, so that will be a pretty decent level to get over on the weekly time frame. But, like I said, I do think this one is bottomed out. But, keep in mind, guys, these are extremely risky plays. anything can happen here. And I'm going to talk about two other stocks that do have some catalyst coming. So these are worth watching as well. The first one I want to talk about is ticker BTBD, which is currently trading at $1.72. Now this one actually spiked to just around $5.60 on in the beginning of August, and then this one spiked to just around $4.50 in the beginning of September. Like I said, if you actually go in the lower time frames, it probably went a little higher than that, but this one is coming off of a triple bottom. So it looks like this one is based out as well, and we do have a merger catalyst. They're merging with a drone company, and this is expected to finalize or potentially get some updates on this moving forward in the fourth quarter of this year or in Q1 of 2026. So this one does have that nice catalyst and is coming off lows, so that's why I do like this one as well. Ticker BTBD. Another one to watch, which is currently trading around $1.41, is ticker SGN, Signing Day Sports. So this is one that just recently had this falling wedge breakout on the daily time frame. This is a company that does have a merger with a crypto related and AI data center related company that is profitable, and this is expected to close in the fourth quarter of 2025 or in the first quarter of 2026. And the company they're merging with in 2024, they generated around $23 million in total revenue and had net income of just around $5.7 million. So it is a profitable company they are trying to merge with. So that's why this one is worth watching as well, guys. But either way, that is really all I have for today's video. Let me know in the comments what you think about these plays, any other plays you're watching, and I will see you on the next video.